Well, good afternoon, everybody. I hope you're well. Mike Smith here. Delighted to see you all here at this time, and interesting times on the markets. And let's have our little meander around. If you just let me know you're hearing me and seeing me okay, that would be sensational. Fantastic, Andrew. Thanks. Cheers, Shane. Hi, Rachel. Cheers, Chris. G'day, Wayne. Hi, Ian. Hey, Keith. Right, okay, let's get kicked off. I think that's good. Obviously, this is the opinions of myself and shouldn't be taken as representative of Go Markets. We are looking at live markets, so of course the usual rules apply. This is for educational purposes only and shouldn't be taken as direct advice to take trading action. You, of course, g'day, Gigi, how are you, mate? You, of course, should have your own trading plans and do your own due diligence to make sure that all is good and manage risk accordingly. So, since we last met, it's been a little eventful. We've just have a look at the news today, and then we'll just reflect on what's going on. So, obviously, we had a mixed session on Wall Street last night. We had the Nasdaq outperform the S&P 500, touching record highs intraday before dropping off and then recovering a little bit towards the back end of the day. US futures are slightly positive. The Nasdaq again seems to be where it's at. And Asian markets are generally up in Asian trading, but the ASX is not looking happy at this stage. We had a reasonably positive opening, but we've just dropped back to around about neutral now. We'll just see where things are at right now. It might just be a middle of the day blip, but it's certainly been a relatively significant drift downwards. The US dollar is trading around that key 90 level, as we've talked about before. Precious metals have popped back to the top of the range that they've been trading in, which was tested obviously last week. We'll talk about that in a moment. And cryptos, interestingly, are threatening support to the downside. On the data front, we've already had some Japanese GDP number, which came in slightly better than expected, but there was a very, very little movement in either the Nikkei or the yen when that came out. The Nikkei is slightly up, but nothing earth-shatteringly good. There is German industrial production and US trade balance figures being the significant data for today. Let's just have a look at some stuff. Let's start with the futures. You can see there the Nasdaq is outperforming. Dow's actually drifted downwards. This may be on the back of perhaps a little rise in the 10-year note, so yields have dropped a little bit. But you can see here there's US dollar index around that 90 level with gold and silver. Very little movement today. Gold, as I said, is around that 90 level. Got a little bit of a drop back in Brent over the last couple of days. If we look across the if we look across the FX pairs, commodity-based currencies seem to be underperforming. The euro is probably the stronger, or the Swiss franc are probably the stronger of the two non-USD currencies. So we'll have a check-in on some of those in a moment. But the FX market is just ridiculously poor. Copper's dropped again, is back down to the critical 450 level. That's important. We've had a drift down in copper over the last couple of weeks, and that's worth having a look at. If we look at the data coming out today, there you can see that GDP number coming out, still in negative territory in Japan, but slightly better than expected, as I suggested. And then we've got industrial production coming out of Germany. That's important that comes in at least as good as expectations to keep the good feeling going in Europe. But we have got the GDP number. That's quite a big number out of Europe. We'll see if that, I've just got a feeling that might surprise to the upside and maybe even reach neutral rather than negative. And then, of course, we've got employment numbers coming out of Europe as well. So quite a big session in Europe that has the potential at least to move FX markets. And there's the trade balance figures coming out of the US later. So really, it's a day that's going to be interesting, but I think on the FX side of things, then we're going to be looking at the euro perhaps the next few hours. Here's the Asian indices, and really these have all dropped. These have all dropped down from where they were early on. The Nikkei was up close to 0.4%, I think, and he's only hanging on to green by its fingernails. ASX is down again, just dropped below neutral in the last half hour or so. So we'll have a closer look at those in a moment. Let's have a look at some charts. Let's start with what should we start with? Let's start with the US 500 daily, of course. So you see there, we saw a really choppy session on Thursday. There was all sorts of inflationary concerns came up because the weekly jobs number and the ADP jobs number absolutely smashed expectations. So we had big sell-offs or big increases in bond yields, the USD, big sell-offs in all the currencies versus the USD, and stocks dropped as well. And followed by the next day, we got a fairly tepid non-farm payroll, so the monthly employment number out of the US, which shot it up again. And you can see there that it shot it up to cover the previous day's losses and some. A bit of a neutral day yesterday, as I said, just finished slightly negative, but you can see we're testing those record highs again in Asian trading today. If we look at the Nasdaq, actually sort of so just pull this out a bit. So this is what happens when you're up in the early hours of the morning. You start to trade this stuff. So the Nasdaq not only hit so this was pretty low yesterday, and then it just sort of managed to creep up for really the second half of the session, and then continued that move up in Asia. Now we're flattened off, so you can see that's a trade that's been since closed. But that just says where it's at, and it's interesting that the Nasdaq is outperforming, because the Nasdaq is, if we look at the daily chart, you can see this is one I trade short. I mean, now that's a bit radical. Let's get rid of that, and let's bring it up. But you can see again, we had Thursday's sell-off. It was just looking as though it was going to tip as it sort of hit this level here. So it sort of was static for a few days, and then Thursday, this was Thursday's, and then Friday, that big reversal candle to the upside, and since then we've had two positive days, and record highs aren't that far away on the Nasdaq either, which in light of where we're at with concerns about, so only 1.2% away from where we are with the futures contract now. So with the bond yields still being the spectre that's the major headwind on the market, we're actually sort of holding up okay. I mentioned the US dollar index was trading around 90. There you go. There's Thursday's action. There's Friday's action to bring it down. So we've now reversed Thursday completely. Slightly higher in Asian trading than we were on open, just hanging on to 90.13 there. But really, there's a range there that we've been in now for best part of a month. So guess what's going to happen with that US dollar weakness? We've got back again a choppy Thursday and Friday after doing nothing in gold for the previous sort of 5 days. Big move downwards, tested a support, put back up again. We're back at 1900. Now, of course, because the US dollar is where it is, just a quick look at silver. There we go, in a range below resistance at 28.12. There's a quick pullback and all, but that was on the back of a fantastic week. Good day, Michael. The longer you can make it, the better. Now, we've been banging on for the last... Sorry, dropped my microphone there. I've been banging on for the last few weeks about how range-bound everything is in FX world, and why long-term trading of FX is just so incredibly difficult. So there we go. There's the case in point. There's Thursday's big drop. There's Friday's recovery, and we're back in the range again that we've been in for a month on Euro USD. Question is, have we got enough momentum to take us back towards the top of the range again? And that would be not an unreasonable sort of number of pips to grab, around about the 29.33 somewhere around there, depending on where you place your entries, etc. But nothing really that would indicate any strong move either way. Here's the yen. We had that pop up on the USD on Thursday, reversal on Friday, back into the range. So though we're at the top of the range there, again, nothing there shouting, trade me, trade me. Be interesting if we just break yesterday's low. Just pop it on an hourly chart. So there's yesterday's low there. Just bring this like so. So we're trying to see if there's any potential for anything of interest at all. And you can see this is what we're playing with FX. Even if it breaks that, we've got some noise about 20 pips down. Forget it. Go home. Aussie USD. Now this could be interesting, but again, limited. So you can see we tested that resistance to the upside around 77.65. If we look at the next place to the upside on the hourly chart, again, we're just 30 pips away to that resistance on the daily chart. I should have really colored that a different color so you can differentiate between the two. But there's the daily resistance at 78 cents essentially. So we've just hit a block on the hourly chart around the 77.65. But if we look to the downside again, if we do break downwards, we're limited to 25, 27 pips again before we hit all this noise. Here, 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 and here. And of course here. Look outside the US dollar pairs and you're going to see a very similar picture. We'll look at the New Zealand yen. You can see we're in a trading trading range there. That green line reflects a key level on the daily chart that it's broke below on Thursday. It's tried to make its way back up there. So if we're looking at an hourly chart, if we do get a potential break of around about this 79.30 level, again, we're sort of struggling to find 30 pips in there, maybe. So I've seen this time and time again. We'll just have a quick look at the Euro New Zealand dollar, because remember what we saw on FinViz was the Euro was actually doing okay, holding its own, whereas the Kiwi wasn't. So what does this look like? Well, let's look at a daily chart first. Put the key lines in. You can see on the daily chart, there's a great example of the 200 moving average being resistance. Just bring it close. You can see Thursday's action, Friday's action reversed it, and that's where we've been since. So, is it worth trading this potential move higher? Well, certainly there's 100 pips up to that 200 MA. So that says, well, let's look at the 30-minute chart. Now, this probably is our FX chart of the day. Now, we would have to be patient with this. We're going to be waiting until it's broken 168.92. In fact, we're going to make that 169. Okay, because it's a nice round number. So that would clear. It would clear all of this noise here. So all of this noise here, 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 and here. So it would clear that. We've got a little bit of space to the upside where we may pause around about 43 pips up, but could well be on. That was simply a trend pause there, but could give us a round about that 40 odd pips, perhaps. So the Euro New Zealand dollar on the 30-minute chart is our chart of the day. And as I said, key level on this is 169. The other one we've been having a look at was the Aussie Kiwi, and you can see that's really gone nowhere the last 3 days after looking as though there might be some momentum in this. But again, even on the daily chart, we're only talking perhaps 57 pips to get back up to there. Lots of noise in this space here. So it will be really hard to justify a trade. We'll just take this back and you can see. Okay, so, but if we did break that pivot high, this is what we're up for. Again, 26 pips at best, 34 pips. So we like our Euro Kiwi to have a wee look at there as one to check out. Okay, now I did mention cryptos. Let's look at Bitcoin. This is why Bitcoin's interesting today. See how we've been trading around this 200 MA for the last essentially a little over 2 weeks, following that big drop. That was an Elon Musk comment drop with some recovery. Actually tested 30,000 to the downside. There we go. Actually got down there. So what's different about today? Well, yesterday last night's US close represented a low not seen since February. Okay, so a follow through on this in Asia, and there looks to be some. It's towards the back end of the session. We look at a 15-minute chart, and you can see how it's drifted down since Asian Open. We're now starting to accelerate a little bit into this drop, and if we break 30,000, then all hell could break loose, because we've very little then to hang on to. I mean, even the drop down to 30,000 from a couple of days ago is 20%. So where we are now represents a drop of 50% in the space of less than a couple of months. Okay, so quite a radical sell-off. Let's just check in on Ethereum just to see, and that isn't faring quite as badly as Bitcoin. We are still fairly triangular on this, but again, just bring this closer, you'll see they're possibly around this. Look at the lowest close. It was around this 2266 level. So it's outside of Bitcoin, we're down about 40% rather than 50%. But again, if we break this key level, then we could get some major sell-off in cryptos. We have been talking about this for a while now, of course. Okay, well, let's check in on the ASX. We'll have a look at some of the stocks that we talked about last week and see where they're at, but we're just going to do a quick refresh. See where we're at. Yeah, we're still down about 0.1%. Now, what's really interesting about this move down, just pause the screen, there we go. So you see it's down 0.1%, and you can see again, since that early flurry, which took us up to around about this 7,300 level, over 7,300 level, then we've dropped right back down. So from our high today already, we've dropped a best part of so 310 pips there, so well over 35 points from our highs of the session. So whether we find a bottom here or not remains to be seen, but certainly if the US futures look positive, we may get a drag up towards the back end of the session. So, and interestingly, despite that negative component to the index as a whole, we're still seeing advances beating decliners, which again would suggest that there is the potential for a move back higher towards the back end of the session. But if we look down the list, it doesn't make great reading really. We've got Afterpay moving up, which you know are obviously one of our favorites. We've got the banks looking a little weak. We've got resources looking a little weak. We're down 1% on BHP. If we just pop down here, we'll have a look at FMG. You can see down a little better. Flight Centre's doing very well. We'll have a look at that in a moment. Oz Minerals is up, sort of bucking the trend a little bit. So very, very mixed picture. It looks as though there's lots of repositioning going on at this stage. You see Qantas at 485. That's interesting as well. We talked about that as a potential level last week. Healthcare isn't faring much better. Very mixed picture again. Energy is doing okay. We see Santos up. We see Allsearch up, but we can see Woodside down. So again, very, very sector specific. Sorry, stock specific even within sectors. Webjet's doing okay, so that travel sector looks as though it's doing okay. And also we're seeing Zip and Zero just edge higher a little bit. Wall is dropped off. We took this position last week and we've closed it out early this morning when it hadn't dropped off so much, but it is coming down a little bit, so some profit taking going on in that. Now let's have a look at some of these. So let's start with Let's start with Worley, because that was a really quite a nice nimble trade. So if we look on the data, this is where we saw it last week on this candle here, and we're about there when we talked about it last week. Okay, and we suggested that the upside was around about to here from that move where it might pause, and sure enough, that's exactly what it's done. Okay, so we're up around about 4%, which was our profit target on this from a technical point of view, and that seems to have come to pass. Now, it'll be interesting to see where this finishes. If it does have some more legs in it, then we could see it up yet another 4% to retest that level at around about $13. And again, context is good. So $13, we break that, we could be really quite away in a very exciting way to take us. So that's $13 that we just referenced. But you can see there, if we break that level, then we're reasonably clear sky up to around about 1590. So this is one to keep on the radar, I would suggest. Okay, now a couple of others we looked at last week. We looked at the lithium stocks, and again, we've done pretty well on these. So there's PLS, which we've been watching for a while, and we did suggest that this around about this 134 level was potentially a block, and you can see how that again has been the case. So let's say 135, which it's actually touched the last couple of days. So even though that was a red candle, it was still higher. So let's just show you on this. So yeah, there you see the trade. Okay, so we've done this again, took advantage, possibly a little later in this, maybe a candle or so later. But you can see that again, with profit taken on that. Now, if we look at this, this is all-time high stuff. So we break this 135, and I still think this is a bullish place to be long-term, then that could move higher. If we look at Galaxy, which is the other players in the game, did move up, but most definitely got stuck at that level. So just a small profit taken in this. 410 was the level, and again, we had 2 tests in the last 4 days. So that says get out of here. One that didn't quite go away was Iluka. So you can see there a bit of a neutral sort of trade there. It looked pretty strong on the back of this high close here, followed through one day, and then has really since sort of dropped back to this level it broke through that was of interest at around about this. Get up. Around about this 775 level that we talked about before. So worthwhile keeping an eye again, seeing if it's got some, see if it bounces off this, pops back up to $8. But that's essentially where some of the trades that we talked about last week are at. Now let's just have a look at a couple in the US that we referenced before we go on to the new ones today, because I think it's important to follow through on some of this. Zoom we liked when it was down here on a break of this. We suggest this 200 MA was where it could get up to, and that indeed is where it got up to. Interestingly, in after hours trading, it's up to around about 340. Looked as though it could pop higher last week, but really sort of got stuck a little bit. So that's still one to keep an eye on, and certainly as in terms of where it closed last night, would have been up from where we got interested in it. And Twitter was the other one discussed. You can see that there's an entry in this again. Just pull back a little bit, but that was we talked about this week before last as an entry on a break of that 200 MA, and you can see it's sort of this doesn't look much, but Twitter moves quite radically. You can see that's 5.6% on that. I'll show you that, and that again was this trade here. Twitter is one that's actually quite nice to trade intraday if you're ever up at that stage. Okay, so all right, now let's look at what's going on right now. So TWE is one that we've been keeping an eye on for a break of this level here, and we'll put it back on the weekly chart so you can see the why behind this. No, we won't. We'll just shimmy it back on the daily. So you can see we talked about this as a potential, but we liked it on the break of the 200 MA. We liked it as a profit take at the level that it's at now, but you can just see it's starting just to edge over that 1185 level. Deals that on that 1314 level is possibly on the cards, and then again we're gap filling to the upside. TW seems to be doing okay, and that's not a surprising. If we look at the momentum of the way the stock moves, that's actually still quite strong. Look at the gap between those two. And in fact, what I'll do just to show you this, I'll put the MACD on here. And what I want you to look at is essentially the momentum behind this latest move and how it compared. Now, this was a little bit of a blip caused by that earnings outcome. Okay, so that's why that picked up. But with the exception of that gap up, then this momentum behind this trade is as strong as I can take it back as far as you want. And we're not seeing many moves to the upside that have this momentum. So that suggests that this could be ready to pop to the upside. You just need to be a little patient with this. And yeah, if we do like the insurers are all doing well today. If we look at Suncorp, that seems to be holding up okay. This was the key level it broke through, but it just seems to have paused here. If we just put it on a weekly chart, you can see where this sits and why potentially there's a move back to this level of around about, could test $11 before it bounces up again. So again, not for trade today. QBE, again, well, let's look at where that is. Again, we got that breakthrough last week. Just pop it on the weekly chart again to see with the why. There's the level. So that was last week's trading. On the chart, there we go. So we've got a potential break of that on Wednesday last week, and you can see we moved up quite nicely, and then we've just pulled back a little bit today. So again, just wait for confirmation that uptrend is going to continue, but at this stage, it looks pretty good, pretty hot to trot. Now let's check in on our old favorites, APT. First of all, now APT, if you ignore this 200 let's just get rid of some of these lines, eh? This is what happens when chart over chart. Let's just get rid of this. That's better. We've got a clean slate. Okay, so this high here would represent a closing high we haven't seen since, well, essentially for the whole of May, okay? The only issue is with this, of course, if this 200 moving average wasn't here, then we might get more excited about this. But the fact that that 200 moving average is there and this was support here says, just wait until it's broken 100 from here. Now, it's not a bad little sort of 2.5% to pick up, but really it's a trade you're possibly forcing a little bit. We'll look at Zero, another one of our favorites long term. Again, we've had a really nice move up in that, but again, you can sort of see it's paused within probably a $3 or $4 range there. So we've got a nice line in the sand that says 130, 132 is where we get interested in this. That was also quite a lot of price action around there. So could see it up as far as 140 possibly, which would represent a move up of around about 6.5%. So you can see that the story in terms of where we are now, we really don't want to force trades. But again, we need to look, Qantas are looking pretty impressive. We have talked time and time again about this $5 level, which we're just keeping an eye on. Now it has broken the 200 MA, came back, tested it. We're up again in trading today. And essentially we've got about 2.5% again to wait till it breaks $5. If it breaks $5, that's a very strong technical sign that there's some confidence going back into this. You can see why that is. Looking at that, we could be up 50 cents, which is about obviously 10% on a $5 stock. Looking at the other companies in that sector, let these guys catch up a bit. So we'll make sure we've got all the data. Flight Centre, again, we pulled back a little bit, although we are up today. So again, we've got 200 MA sitting over that, so we're not happy with that at the moment. Well, let's look at Webjet. Looked as though it was going to shoot for the moon when it broke that 200 MA, but we dropped back beneath it, and so again, not somewhere where we want to be. But right now, and possibly an entry level will be around about that 533. So only about 20 cents up from where we are now. But again, patience is important. We wanted to have a look at James Hardie. So James Hardie, you can see, is moving. He tested that resistance last week, pulled back, and we're possibly going to work our way back up to that. So you can see it's really hard to find an obvious trade that's going on. If I'm just having a quick check. There's a couple that you guys have suggested, but what do I think is causing this trading range in FX? Shane, the trading range in FX really has been in place for some time. There's no obvious economic head or tailwinds going on right now, is the bottom line. The market has already priced in some good news. The US dollar is sort of holding on simply because of that specter of bond yields increases. If those increase, you'll get the US dollar rising. So I think there's a reluctance to sell off the USD, despite the creeping up of equity markets, which again have sort of been in a range for the last sort of week and a half or so, really, even though they're on the top of the range. So it just is, the market is absent of anything that's that says a change in sentiment is required here. All good. Yep. Okay. So as I think you saw there, there's actually very little that's lighting our candle, and part of me felt, well, look, maybe as good a recommendation or as good a chart of the day to say is to say that there isn't one, because often sitting on the sidelines waiting for the right opportunities is a good place to be. I'm just flicking through these questions. Now, I did see one that I liked. So I'm just going to share it with you now. It's Pro Medicus. Okay, from a technical point of view, this looks quite strong. Okay, you can see that breakthrough we had on Friday, and we had a pretty neutral day yesterday, but we've got some follow through in trading today. Now, that's not bad volume considering we've got, what, 3 hours left in the markets at this stage. Let's put it into context, take it back to the weekly chart. So we are essentially trading all-time highs on Pro Medicus. It's certainly the outperformer in the healthcare sector. So do your due diligence. I'm not sure when earnings are on Pro Medicus, but that certainly was a rise today that wasn't based on any significant news that I could see. So that certainly is one worth having a look at. Yeah, I can have a look at LYC in a moment. Just having a look through these. Okay. No, I think we've how are coals doing? So coals were, wow, okay. Coals were actually doing pretty well. Let's put it on the daily chart. This was our chart of the week a couple of weeks ago. We liked the break here, actually more than a couple of weeks ago at this stage. We like this break here, and though it pulled back a little bit, it's worked its way back up. Now this is a high we haven't seen since February. Actually, it was our chart of the day was if it broke through this. I think when we actually had it, it was here. It was this candle here, and it was actually up over that 200 MA in early trading where we actually met and then just dropped back in the day. So we got that breakthrough there. Looks as though it might creep up. That's as good a chart as Pro Medicus in terms of potential upside. Look as though we could close this gap here. Over time, it's not a fast mover, so it's a 5% move up to there. So that's as far as we go. CSR. So I looked at this. I looked at this yesterday and didn't like it, and still don't like it. It is trading within a range. Get interested if it breaks 615, maybe technically on to the upside. Downside just very, very noisy. Very difficult to eke out something good with that. Okay, have a look at the US. For those who trade the US market, just to look around a few of them. We did have some Apple software update kicking around, and really this Apple is in neutral territory. It doesn't look as though it's going anywhere. There we go. We sort of like the look of AMD a little bit. You can see how it's flatlined, but we've got it sitting over the 200 MA. But really, we've got some work to do on this before we get confident from a technical point of view. Possibly that 83 level could see a break, so keep an eye on. Disney, to answer your question, is actually looking again in need of some new information. So you can see how this started with the USD, okay? This sort of uncertainty idea. So it started with the USD and the US dollar pairs. Then it sort of moved on to the commodity space and the some of the indices, and now we're seeing it in individual stocks as well. So you've got to, it's a really strong definition of what constitutes a stock picker's market. General Motors. I'm going to just give you ping this up here. I'm going to give you the weekly context on this. I'm going to give you the monthly context on this to show you where General Motors are. So General Motors, really quite a strong few days. After that break of this resistance at 61.73, paused a little bit. So we want to see a break of that pivot high from last night to be interesting. If we look at the banks are going nowhere. If we look at the airlines, see if there's an opening up trade going on. You can see there's not. It's trading with the bottom of a range, and even one could even suggest that there may be a short, except I wouldn't short this market right now from where it's sitting as a whole. PayPal, one we identified again. We've got a flattening off of that, but a potential to 280 if we do get some movement to the upside. And we've got Twitter. So excuse me for making it once again, but Twitter is our trade of the day for the US. We see an upside potential. Let's just knock this off. We see an upside potential to test that. We don't think this will get in the way. This noise here from a technical point of view. There's not enough candles there to get really uptight. So we are looking for a 7% rise in Twitter up towards that 63.60 is our US chart of the day. Okay, any others you want me to have a look at, guys? Well, just before we finish today, from any asset class. Can certainly put Ripple on. So Ripple's no different to any of the cryptos. You can see it's sort of dropping. You can see it's dropping down to hit a low. It hasn't. Again, this would be a closing low we haven't seen since March. We are 143% staggering off the highs for this. Cryptos just aren't a happy place for right now. Any last one or two before we close up today? Yeah, we can certainly have a look at. Would I fancy BHP as a long term? Not at this stage. I'd like to see copper, which we didn't have a look at. I'd like to see copper just start to rise again. As I said, I think in the opening thing, it's just sort of pulled back to support. So this is where copper was around about 2011. This was the highest 2011. So there's been a couple of very, very choppy to trade, as I know, from personal experience. Yeah, so that's sort of really where it's at. LYC. Now, we mentioned something on LYC last week that got a little bit of a concern. Let's just get rid of a couple of these lines out the way. Just there we go. So one would look at this chart and say, well, look, there's a nice support in place here, which seems to be being honored at around about this 520 level. But I pointed out last week that one thing that does concern me about this is this. So if we look at our highs, on every bounce, which of course we've played a few times, this has been our chart of the week 3 or 4 times on these bounces. If we look at that, then that doesn't fill you full of happy joy feelings that every bounce has just got a little shorter. So it very much resembles a textbook descending triangle. So we do need to see it if one was to get interested in Linus, then we'd want to see it break this 563 level. It's almost the opposite situation to, and this is something just to do every now and then, just to sort of give you a perspective. Something that we noted on Bitcoin some time ago. You can see that every dip we had a buy, dip, buy, dip, buy, dip, buy. The change was when we got this lower, dip. Okay. Up until that stage, every time it happened, there was a big dip, and you notice the buying that came in after this dip. Very, very low volume compared to any other previous buying that came in. Okay, so this was really quite a low volume buying, no enthusiasm there at all, and that's because these higher lows, that last wave, for one of a better term, it's more than 5 waves there, Mr. Elliott. But that last wave was actually below this one. And once it broke that, confirmed that, because there was only one day where it breached that, once it confirmed that, then that's when we started to sell off significantly. So just watch this. It's worthwhile watching this when something's sort of going up for some period of time or coming down for some period of time, just as a sort of a reference point. It's actually a good example, so I just thought I'd smash it on up there if that's okay. All right, guys. Well, look, just a couple of things going on that you really should be part of. We have got a special share CFD session tonight. If you're not in for that yet, just going to put it in chat now. Put share CFD. The other thing going on, so that's in chat now. So that's at 8 o'clock kickoff tonight. The other thing going on is Elon. There's a bit of a miscommunication between the pair of us. So Elon is coming back to do his auto chartist, his rescheduled auto chartist on Wednesday. So if you're not in a circle, or actually try and register for this anyway, because the rolling registration lapsed. So I'm just going to put in a circle here. So just get yourself in to that as well. And that both of the sorry, that one obviously is rolling registration. The share CFD isn't. Although I might put on an extra session because I'm a nice guy. Okay, just a quick last check of the ASX. So those are both in chat, yes. No, we're still to the downside about 0.16. You can sort of see there. Just looking down, I think we're good. All good. Okay. Fantastic, guys. Great to see you here. Thank you very much for rocking up. Your suggestions are always great for things to have a look at. And I will catch you very soon. Good man, Andrew. You're welcome, Peter. Yeah, you guys in Victoria, stay safe. Hey. Yeah, we shall see you tonight. Awesome. Great stuff. Bye-bye for now, guys. See ya.